This conference will now be recorded.
There we go. So yeah, thank you for coming, attending. Good afternoon, everyone. My name is Stuart. I'm the Technical Director at CIM Services. And joining me today is John from Aspen Waite, who's also Technical Director there, and is going to talk to you about R&D tax credits and what they can do for your business. Shirley, unfortunately, isn't able to join us today. She's suffering with COVID at the moment, so she's doing okay, but sadly isn't well enough to be with us. So we have been dealing with Aspen Waite for a number of years. They were introduced to us at a breakfast meeting in the New Forest, which is not too far from where we are, and started talking to us about R&D tax credits and what it's about. And at first we were a little bit skeptical because it sounded too good to be true, but having worked with them for a number of years, seen the benefits, we thought it was about time we sort of set up a webinar like this to introduce our customers to them and to see if our customers can benefit from using the R&D tax credit scheme in the way that we have. So on that note, I'll hand over to John. He's got a few slides to go through, and if there's any questions, we've got a little bit of time at the end, and feel free to ask away either in the chat or to unmute yourself at the end and just ask through your microphone. Okay, John, I'll hand over to you.
Thanks, Stuart. Okay, if you want to go to the next slide, please. Okay, so basically, what are R&D tax credits, and are you already claiming, or should you be claiming if you're not? So the fact is that most people are not aware that R&D tax credits are available to every active company, limited company, if they are doing some sort of research and development. So it's not just the big drugs companies, it's anybody that's trying to innovate, trying to adapt anything, trying to do something new. I'll come on to that in a bit. Most companies are missing out because they're not aware that they're actually doing something that is qualifying as far as the tax credit scheme is concerned, which means you're missing out on probably the best tax planning tool that's out there. And it's a really good way to get some extra cash to reinvest into your business, to do whatever you want to do in growing your business and making it more profitable. So if you could move on to the next slide, please, Stuart. So, you know, if you're trying to do anything to be better than your competitors, then you should be investing, or you will be investing money and time in innovating to be one step ahead of the crowd. So the R&D scheme, which was set up in 2000 and has been enhanced ever since then, was set up to encourage companies to do more, to innovate and improve. So it is a really useful tax planning tool, as I said before. So the scheme works by we figure out what your expenditure is, your R&D expenditure is in a given financial period. The scheme then uplifts that by 130%, and it's that figure that goes into your tax computation, which will either reduce your profit line in your tax return, or it will enhance your losses. So if it's reducing your profits, then that means that you're paying less corporation tax. And if we're enhancing the losses, we can actually sacrifice that loss for cash. So if you could pop on to the next slide again, please. So the questions to ask yourself are, if you are a limited company, yes, you can claim. Are you looking for a way to remain ahead of your competitors? Have you identified a problem that exists, or are you trying to come up with a solution to something? Are you investing money in trying to become more efficient or more effective? Have you thought up new products? Are you planning on new products? Are you trying to do something to improve your green credentials? Have you invested in anything bespoke? Are you trying to provide solutions for your customers that are above the ordinary? And do you have anything that you tried and didn't work? Failed projects are really quite useful as far as R&D is concerned. So if any of those things is the answer is yes to any of those things, then you're more than likely doing something that qualifies as far as the scheme is concerned.
And that bespoke IT work you were referring to there, John, would include bespoke development we do for our customers. So,
oh, absolutely, yeah.
Include that in any R&D claim that you make.
Well, yeah, I mean, HMRC have become a little more strict of late on IT things, but given that you've got, you've got patented stuff and you've got proper IP, you are pushing the boundaries of IT. So in the past, we've done claims for companies who have developed their own CRM systems because there was nothing out in the marketplace on the shelf that they could buy. HMRC have now said that there are so many of those things on the market now that really doesn't qualify anymore. But if you are working on using AI to help with a learning system, or you're connecting to the Internet of Things, or you're doing something above the ordinary, something that's pushing the boundaries of what is currently standard practice in IT, then you still have an IT claim. I mean, what you do clearly is doing stuff that nobody else has done. So,
right, I'll move on to the next slide.
Yes, please. Yeah. Yeah. So any of these things on the screen here now are things that could qualify as what HMRC deem as qualifying R&D, which means you are doing something that is seeking to make some sort of advance in an area of science or technology. So that's very broad. They don't do anything in social sciences, but given that we're looking at manufacturing companies primarily here, you are going to be doing stuff that is qualifying. So are you trying to make things cheaper, more effective, lighter, faster? Are you doing anything that's creating, meaning that you have to build prototypes? Are you trying to design and develop and test new things, or adapt and test the adaptations? Are you working with new materials? Are you trying to reduce waste? All of these things and more are what we would classify as qualifying R&D activity. So really it's a case of look at what you do on a normal day, and then also think about jobs that you've had where there have been problems, where you've had a challenge to overcome, where there's been some uncertainty as to the outcome. Then you are definitely doing qualifying R&D. Next slide, please, Stuart. So without going into too much detail, there are a number of elements that we can claim. So all of these things are elements that HMRC classify as eligible costs. So anything that goes through your profit and loss accounts that has been utilised for R&D is claimable. So staff pay, directors pay, so that's gross pay, employers' NI, employers' pension. So all of those staff costs. So when you've got staff working on an R&D project, we work out what time they have spent on it, and then we can claim that proportion of their time over the year. So that provides the bulk of the costs normally is staff costs, especially for your company, Stuart, because it's all staff really, isn't it?
Yeah, and I imagine for a lot of our customers, it's going to be people who are designing products and building prototypes of products. You know, when they're developing new things, building manufacturing new prototypes, etc. That's where it's going to come in for our customers.
Yeah, I mean, I'll come on to this in a bit, but there are two separate schemes. One's the SME scheme, which is what we're talking about at the moment, and the other one is the RDEC scheme, which I'll go on to later. But just to run through some more of the costs then. So we've got subcontractors and consultants, and I need to change that slide because the word consultant is something we shouldn't be using because HMRC don't like that word. What we have are two separate things. We have subcontractors and we have what they call externally provided workers. So if you have third-party labour and you're using some of their time on R&D projects, but you're telling them what to do, they're just working for you, then they are an externally provided worker. So they are doing what you've told them to try and resolve the issues in the R&D that you're doing. If you have a specialist requirement, so you need somebody to develop a control panel or something, say, but you don't know how to do it, but you need it in order to achieve your goal in your project, then that would be a subcontractor. So you've asked a separate company to come up with a solution for you that will help you in your thing. So subcontractors and externally provided workers, those costs are capped at 65% as part of the scheme. So we would work out what proportion they have spent of their time they've spent on R&D, and then we would claim that, which would then be capped at 65%. We're able to claim any materials and sundry other things like utilities that have been consumed in the act of doing the R&D. So if you've built a prototype which you test to destruction or you use as a demonstration model that you haven't sold, you don't sell it, then you can claim all of the costs of the prototype. If you've built a prototype and then you sell it, we would be able to claim the costs of the difference between how much it costs to build the prototype and how much it would cost to then build production models afterwards, which would be less. So the difference between the two, the marginal cost, is what we could claim. We claim utilities usually in the same proportion as the proportion of total staff time spent on R&D, although that could be enhanced. So I know that we have clients who have used a lot of, so not just your utility costs, you know, your heat, light and power, but we have clients who are building prototype vehicles, which they then test, so we can claim a proportion of fuel and oil and all those sorts of costs as part of the utilities costs. All testing and trial costs are claimable as well. But the thing to remember is if you haven't put it through your profit and loss accounts, we can't claim it. That said, if you've capitalized, so let's say you built a research and development lab and you needed that in order to undertake your R&D, and without it you couldn't do the R&D, and you've capitalized that because it was a big expenditure, we can use that and we can claim all of the capital allowances on that in year one, whereas usually you would only get 18% year on year as it devalues. So that's quite a useful thing as well. That doesn't happen very often, but it is something to bear in mind. But it is something that we would discuss. Okay. So assuming you haven't done R&D tax credits before, the scheme allows us to claim up to 2 years previously. So let's say you have a February year end. We could currently do a claim for year ended February 2020 and year ended February 2021, and then obviously do 22 once the year end is done. So you can get some substantial cash back quite quickly by doing 2 claims straight away. So the way it works, it doesn't change your accounts, because I've had some people say that to me before. Is it going to affect my profit on my accounts? No, it's just a tax calculation, so it goes onto your tax return. So whatever the expenditure is, gets the 130% uplift, that gets put into your tax computation, that reduces your profit margin or your profit figure for tax purposes, so it reduces your corporation tax payable. So if we're going on a retrospective claim, then you would have already paid your corporation tax, so it would reduce that. You'd get what the difference is back. So you'd get a repayment back from HMRC. If it's a loss, so if you're making a loss or you're in a profit and we may take you from a profit to a loss, you would get the corporation tax already paid back, and then whatever the loss is, we would sacrifice that for cash. Currently that's at 14.5% as part of the scheme. So obviously what we would need to do first is make sure that you don't have any other outstanding corporation tax that we can use those losses against. So we would obviously try to sacrifice for the 19% first, and then you utilize the losses for cash with what's left over. I mean, the ideal situation is that we take you from a profit to a loss in each year, and that way you never pay any corporation tax and you get some cash back every year. But obviously, different companies, different scenarios, we would always do the most tax efficient thing. But obviously, cash is usually king. People are always needing a bit of cash, and therefore that's why we go with that. We go with whatever the director wants to do. Okay, final slide, I think. So why work with us? Why work with Aspen Waite? Well, we are chartered accountants. We've been in business since 1993, and we've been working on the R&D tax credits since 2001. So we're fully ACCA accredited, regulated, and insured. So you've got peace of mind there. And the reason I emphasize that is because of late there have been an awful lot of fly-by-night companies that come in and offer to do a claim for you for say 15% of the value, and they're not qualified accountants, they're not regulated, they're not insured. So should it go wrong and HMRC query it, you won't see them again, and you will be left with dealing with HMRC to try to prove to them that what you claimed was actually legitimate. So the fact that HMRC can review any tax claim up to 7 years retrospectively means that you want to have some peace of mind. So we've got Aspen Waite, says trusted advisors there. We can provide any service you like. Obviously, R&D is one of our major strengths. But we do work with you every step of the way. So we will sit there and talk to you about your business. What do you want out of your business? So we will give you some free advice at the same time as doing your R&D claims for you. So we will help you with whatever you need. So we would charge 25% of whatever we get for you. Obviously, that encourages us to make best value of the claim, but you're not just paying for us to do the claim, you're paying for us to actually do everything necessary so that HMRC have no reason to come and query the claim.
I think that's the key thing across is, from our point of view, our experience of working with you, we provide you with a copy of our accounts at year end.
Yeah.
We provide you with our payroll details, and we provide you with some reports on the work we've been doing.
Yeah.
And we effectively are hands off from that point, and you take the claim over and do the work, the hard work for us to make sure that the claim goes through. And so I think we've done 7 years worth of claims with you now, and
yeah,
we've not had one query at any stage. So
yeah, and none of your claims have actually been officially inquired into by HMRC. So yeah.
I think that's where the service comes into its own, really.
Absolutely, yeah. And actually, the way things are going now, HMRC have got very, very strict of late, and we are pretty confident that we know why they're doing that, and it's because of this proliferation of unqualified people who are now trying to do claims for companies, and they are not regulated, and they are not. Some of them are very shady, should we put it that way?
You don't say more of that, I don't think.
Well, HMRC have actually, they're going through a consultation period at the moment, but they are actually making things stricter. So they are saying you will now need to provide more information. Things will have to be signed off properly. So the fact that we already are sorting that out. So when we do a claim, we project account. So we will itemize the expenditure by project. We will explain our calculations. We will write a report that will go alongside the claim that answers all of HMRC's questions, shows that we are following the guidelines and the everything that we have to do, so that HMRC can just go through, say yes, okay, fine, tick, here's the money. So that, you know, it's peace of mind, and also you don't have to worry about it. As long as you give us all the information we need, then we're good to go.
The turnaround time is relatively quick as well from HMRC with these claims.
They still have a 28 working day target to turn a claim around from first date of submission. We are finding that an awful lot of claims now are actually coming back a lot quicker than that. We get some that get stalled, but if they go over the 28 days, we chase them relentlessly until they actually do something about it. And really, that's it, I suppose.
Thank you very much. Yeah, I'll hand over to the floor now and see if there's any questions we've got. And if you want to take the questions offline, you can email us. We've all got our contact details already, I hope, but if not, John's email is coming up on the next slide as well. So if there's any questions, please let us know. If not, thank you for attending. Thank you for your time, John.
Yep, no problem.
We will leave it there and wish everyone a good afternoon.
Yeah, brilliant. Okay, thanks very much.
Thank you.